Good morning. It is Saturday morning, June 8th, from sunny Gilbert, Arizona. Kirk Spano's Fundamental Trends on the road. And I'll be on the road the next 2 weeks. And I'm going to give you a preview of some things that are coming up this summer before I get started. I actually had them at the end, and I thought I might forget. And I'll probably repeat them at the end, too. I think it's next Friday, but it might be the Friday after. I think it's next Friday. I'm going to be talking commodities, and we're going to have one of the representatives from Turkeyum, which is the fund company that does the soft commodity ETFs, so the soybean ETF, the corn ETF, CORN, and he's going to do a presentation for us. And the reason why I want him on is because it looks like soybeans and then corn are probably both going to bottom out over the summer. Slight lack of demand in soybeans. It looks like a really good crop. Got to see how things are going in Brazil because they're breaking down right now again. But yeah, I thought we'd learn about commodities. And then in July, going to have Dale Pinkert from Forex Analytics on the show. And I'm going to get to ask him about currencies, which I think is going to be pretty exciting. And I go on their show pretty regularly. You know, this week I was over at Forex Analytics and we talked about the oil markets. So we're going to start with the oil markets today. But if you get a chance, check out those free daily webinars from Forex Analytics. I mean, if you really want to get involved and learn how to trade a little bit better, if you can apply those trading techniques a little bit and stick with the long-term, slow-handed approach stuff. Don't get too cute like I think it's David Harold. Harold, your real name's David again, right? I keep forgetting. Everybody contacting me, but you're David, even though on the screen you're Harold, right? So be careful with those shorter-term trades. You don't want to have the calendar working against you. You want to have the calendar working for you, which is why when I buy calls, I usually buy the longer-term calls, the leaps, at least going 7, 8, 9, 10 months out, and sometimes, over a year and a half. So a lot of the leaps that you saw on the June option page, they're January 2020s. That gives me a lot of time to see things work out. Now, do you get quite the bang for your buck if you're, versus being more precise? So if I think something's going to happen next month, maybe I buy a call for 2 months out and I'm getting a cheaper call because there's less time value. Yeah, you can do that, but you're going to have a lot of zeros on the board. And I don't like putting zeros on the board. So I'd rather have a little bit less leverage and a little bit more likelihood of being successful when I buy my calls. So let's get right into oil. High stakes, right? Let's stop talking about oil and let's talk about me instead. Poker. I played poker yesterday, my first warm-up tournament, $125 at Talking Stick in Scottsdale, Arizona, and I came in the money. I made the last money spot, only made a couple $100, but that was despite losing 3 hands. An ace-king, I lost to 5s, but it was a small stack that I was trying to take out. And then I had kings and queens both cracked by an ace-jack and an ace-10, I think it was. They both spiked aces on the turn. So, had I had any good luck, I could be sitting on $3,000, $4,000, $5,000 right now. But that was the warm-up. I won't play poker again until probably Monday or Tuesday, and that's when the run in Las Vegas starts. So I just want to mention that because next Friday and then the Friday after, if you can find your way to Las Vegas, contact me, and we will get together, and we'll find a way to get together. So, all right, let's go back to oil. OPEC, Russia, United States, a lot of things going on in the Middle East. I talked about this over at Forex Analytics. There was a coup attempt in Saudi Arabia 6 weeks ago. Nobody's talking about it. It looks like Prince MBS got shot, right? Mohammed bin Salman was shot. He survived, but he was out of the public view for about 3 or 4 weeks. He reappeared in a meeting with the United Arab Emirates, and then he was chairing a committee, an economic committee in Saudi Arabia. So he's back and he's working again. But things are very turbulent in the Middle East. And if you remember, when I wrote this article, the one about, I can't see. There we go. Ending the Iran deal is right, so make money on it. I got a lot of crap for that. But I talk about how we have to stand behind the Iranian people, whatever it is they decide to do with their country. If they have a peaceful revolution, if they are putting pressure on the imams and mullahs and ayatollah different ways, however they do it, we need to support them. And Benjamin Netanyahu and then Trump have both said in the last couple of weeks, I think Trump just did it early this week, Netanyahu did it early this week, Trump was the week before, about how we need to be supportive of the Iranian people no matter what. And, that really is a pretext for war. It's a pretext for, hey, you guys really should be doing something over there. And if you do, wink, wink, we'll help you. At the same time, Iran is talking about restarting their nuclear program if they don't get everything they want. So they're playing brinksmanship. And I'll tell you what, I said this to Dale Pinkert over at Forex Analytics. I think that it's not even going to take Iran restarting their nuclear program again. I just think they have to say it enough times. At some point, Israel's going to say, you know what, enough is enough. And they're going to bomb 6 or 7 or 8 or 10 nuclear potential capability sites, and they're just going to wipe them out. And that's the way it's going to be. And so when Israel does that, and I'm saying when, I don't even think it's a matter of if anymore, and I think it happens before the midterm elections. I talked about that. Call me a cynic, but I think that there's some political issues coming into play here. You have the religious holidays in the fall for all the major religions. So I think that there's a lot of reasons to think that this conflict is coming to a head right now, and I hate it. I hate that it's happening. I don't think it has to go this way, but because of the personalities involved, you have a lot of people who are completely convinced that they're in the right, that maybe they're gods, the Ayatollah, that they're infallible. All of them maybe, who knows, they think. So I just think we have to be careful about what's going on in the Middle East. And for that reason, we have our oil trades on, not only because of the basic fundamentals of the oil market basically being in balance again, but, the potential for major supply disruptions, not only from sanctions, from Venezuela falling off, but because of potential war-like conflicts. So, it's not something that you want to see happen, but your analysis is what your analysis is. And then you have to make your trades and your investments based on that. So in general, we should be heavy in oil investments because the market supports it, and we will win with those, but we might win a lot on some of the more speculative oil investments if there is a supply disruption, which is why, we've been nibbling in on USO calls and USOU, the leveraged fund, which if we get one more dip in oil prices, to about 62, 61, right in there, 63, 60, low 60 somewhere on oil. That's where you really want to load up on the WTI through USO and USOU. Options maybe on DBO as a substitute for USO, depending on your brokerage. And you want to go a little longer dated on the options. I go at least out to January just to give yourself the calendar, right? You want the calendar on your side, even if you're paying a little bit for it. Somebody was buying calls to August. I think that's a little early, but, if you get a pop, don't be greedy. Take your profits. As far as what's going to go on in the oil long term, I do think that we'll maintain the Goldilocks price long term of around $80 a barrel because everybody makes money on that. Our companies become incredibly cash flow positive, which is why we want to be levered to the exploration and production companies. People are asking me about pipelines. Yeah, there's a couple of pipeline plays as secondary things, but really, it's the oil companies that are really going to make just a huge amount of money as oil prices go up. We've talked about the cash flow. We've talked about the earnings. They're already making money at $50 a barrel. So how much do they make at 70? A lot. There's a special unit of economic measurement. It's called a shit ton. That's how much money they're going to make. They're going to make a shit ton of money. So you want to stick with the companies that have good takeaway from the Permian, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gulf of Mexico, that have good takeaway from the Gul Some of the companies that are unhedged, like Whiting, which might be a little bit expensive right now, but there are companies, and I have a chart somewhere that shows which companies are the most hedged and the least hedged. I think it's a Bloomberg chart. So the least hedged oil companies, Continental Resources is one of them. Those are the companies that should do real well, but you have to figure out, are they already priced for it, right? Is their stock already priced for it? And that's always the dichotomy you're fighting against, is how good is this company? Hey, it's really good. How good is the share price? Oh, it's already priced in. So you have to find both things. You got to find a great investment that happens to not be priced like a great investment. And that's tough. That's why I like Encana. I think Encana is a great investment, but it's not priced like a great investment. People are still just living in the past. They don't look forward. That is a common human flaw, to look backwards and not look forwards. I don't know why we try to do it, but we need to be aware of history. We need to understand history. We need to not be revisionist in our history, but then we need to look forward and figure these things out. So one of the things when you look forward is, okay, so if oil finds that $80 Goldilocks level for a decade or so, like I suspect, what does that do? Let's transition. How does that impact the smart everything world that I talked about here, right? A lot of comments here in the Smart Everything World article. So I encourage you to get into these discussions. There's some pretty smart stuff being said in here too. We've got engineers and other people. Not a lot of comments on this article. There should be. I'm going to do a whole series. I mean, this is going to be for the next couple of years. It's going to be energy and smart everything world, and that's going to be the main thing. What is the smart everything world impact? Well, it's everything. So hey, we can talk about anything we want, because smart AI, Internet of Things, blockchain, it's everywhere. And as we go through, what is the smart everything world? Let's heed the warning of smart people like Stephen Hawking and Elon Musk. We have to be careful that we don't accidentally program something to kill us. And so that'll be important, right? We'll make sure, that we don't program something to kill us. And it won't because the AI hates us. It's because the AI is just going to be programmed to do efficient things, and we may not be all that efficient. So we have to make sure we, don't accidentally extinct ourselves. So, I think you really need to look at this article, and I just bullet point things. Internet of Things, the edge computing is a big deal. That's going to drive semiconductor demand. Blockchain, you're going to have the blockchain Internet of Things, the BIOT. That's going to be something that gets talked about real soon. I've only seen it in a few places, but I think it's the right idea. It's going to be how we secure all sorts of different communications, transactions, sensors. Blockchain is going to be a type of security system. And that is incredibly important in a world where everything is connected. Artificial intelligence is coming. It has actually stalled lately. So there's a couple articles that talk about, hey, AI has gotten to a certain point and they're having a hard time getting to the next level. So does AI improve AI? Do we have to improve AI? How does that work? How do we get it to the next level? How do we keep it from not thinking we're inefficient? There's a lot going on there. Could take many years, but we'll want to get out in front of that. And at the end of the call, I'll talk about trading and how we're going to do that. Augmented reality, major industrial applications, virtual reality, quantum computing is coming, but that's on the back end. Still a ways away from that. Google is working on it, IBM, bunch of companies. Smart cars, smart healthcare, smart homes, smart buildings, smart grid, smart cities, smart government. Hopefully that means lower taxes. And then where to start. And I just throw out a couple funds, and we're going to cherry pick some of the holdings in these funds. So that's where we're going there. I want to go back to the intersection of oil and smart everything though. And you have your smart cars, right? So electric vehicles are coming. We can see that it's happening because we're trying to save the climate. And here I'll do the little tangent. It doesn't matter what you think about climate change. You don't matter. Doesn't matter. Because ultimately you have most of the countries on the planet, including the United States, except for this very brief moment in time, that are very concerned about human-induced climate change, talk to the mayor of Miami. Talk to somebody on the Chesapeake Bay. Talk to somebody in Alaska or on an island. They all see it. They know what's going on. They see the sea levels rising, and it's not just a natural process. We have accelerated natural processes or impeded them or changed them or accelerated, whatever it is the case. I believe that we are impacting the climate in a pretty significant way. The cities are retaining heat. There's just a lot going on. So, again, regardless of what we think, think of the core four. We have to find what the big secular trends are, and if virtually every nation on the planet is trying to do something to stem climate change and improve energy security, then you have to pay attention. So when we see India and China both say they're going to get rid of gasoline-powered cars, sales in the next, 7 years to 12 years, and you have California saying something similar now, and they're as big as, the 13th biggest country they'd be. It matters. So what happens in the smart car world? What happens in the electric vehicle world? Well, let's talk about Tesla here a little bit and GM. And I have talked about this before. Tesla is priced as if it's going to end up being the second or third or maybe first, but a top 3 auto company, down the road. Well, here's the problem. I think that's probably right. I think Tesla will become a gigantic company. They might become the biggest company in the world. The problem is they're priced like it already, right? So you have this company that still has a lot of battleground fatigue going on with it, a lot of fighting about it, people calling for the crash of Tesla, and I'll tell you why that ain't going to happen. They're not going bankrupt. To put it Elon Musk's way, there is no way. I will stake my career on this. Tesla will not go bankrupt. Won't happen. I'll tell you why in a second. But it's also hard stock to be invested in because it's priced for things that should be happening 5 and 10 years from now. It's really priced into the future. What should Tesla be right now? 75 maybe. It should be a $75 stock based on what's coming in the next year or 2 or 3, but it's priced based on everything going well for a decade with some choppiness. And Robert W. Baird has a price target over $400 again. Robert W. Baird is a pretty good shop for doing research. I'll tell you what, they don't have any schmucks over there doing research at Baird. So they're a hometown team here, and it's a company I'd work for maybe if I felt like working for somebody. But a good shop. So if you ever get a chance to take a look at Baird research on something, you should probably take a look because it's pretty legit. And they're normally a little conservative. So if they're saying Tesla into the 400s, okay, now it's in the 300s right now. Do you buy it? Well, it doesn't have our double to triple upside over the next 2, 4, 7 years. And so I don't want to own it because there's a pretty good chance that they have to dilute. Right? They won't go bankrupt, but they might have to dilute the shareholder base to raise several $1 billion that they'll probably need in the short run to bridge that gap from now to when EVs really pick up sometime in the 2020s. So they're going through this growth period, this uncertainty where the short-termism can drive stock prices. It wouldn't surprise me to see them peel off another 5 or 10 or 15% of that company, dilute the shareholders, and to pay for things that they need to do. For example, there's no way they're not going to have a factory in China, and there's no way they're not going to have a factory in India at some point. It's going to happen. And they might even put one in Europe. I think they're going to end up having 5, 6, 7 of their giga plants eventually. And I think that there's some strategic transactions coming. It wouldn't surprise me to see Ford try to buy them. Or GM even. But, right now the shares are so expensive that they couldn't be taken over. But they can peel off those shares and treat them like currency. So keep an eye on that. They're not going bankrupt because they have so many people that want to be involved. So you can say, they need $4 billion. Fine, they'll get $4 billion. That's how the capital markets are treating them. And it's not the typical go to the banker and you need the investment bank to do it, even though Goldman Sachs does support them. And you can't trust Goldman Sachs not to stab you in the back. But the reality is there are billionaire investors and multi-billion-dollar organizations that want to be in with Tesla. And so it'll happen. And let's not throw this out there as a rumor, but let's just think about this. Warren Buffett has that huge investment in BYD, right? Boyd, the symbol's BYD. I call him Boyd. I know that's not their name. This is it. The Chinese electric vehicle company. I don't know. I don't think this is it. But, if Warren Buffett is investing in electric vehicles, he's got a pretty good track record of being forward-looking, don't you think? So let's not throw the baby out with the bathwater here. The electric vehicles are coming, and the intersection of electric vehicles with oil is if gasoline is going to cost us, $1 or $2 more than it did in the last couple of years, eventually people will start doing the math when their next car purchase comes up. So as the price of electric vehicles comes down, we are at the Goldilocks price of oil, so not so high to cause economic disruptions, but high enough to make people do the math. Now all of a sudden you take a look at a Toyota Camry hybrid with 50 miles to the gallon. I think that'll be a major transition vehicle. If you want an SUV, can you look at some hybrids that are coming out? Do you actually look at a Tesla SUV if you're wealthy enough to own one? I think you do. And you say, well, if I can get the EV for about what it's going to cost me on a gasoline-powered car, why wouldn't I go with the EV? Those curves, when you put in total cost of vehicle ownership over 5 years, are getting very close again as the price of oil goes up. So sometime by the early 2020s, as EV prices come down, as we get a more built-out electrical grid, as people are able to put solar on their roof for cheaper, you're going to see EVs take off. And again, we don't know how long that's going to take, but how do we want to treat this as investors? We want to buy into the EV space, probably through the software, probably through the components. And if there's a crash in the general stock market, right? Let's suppose Tesla goes down to 155, 160 again. I'd buy it, right? You have to buy it at that point. And if it dilutes from there and it goes to 75 or 100, you buy more. And that's what you do. You wait for these opportunities that the market might give you, and you take advantage of them. But don't discount the giant secular trends because it doesn't agree with your ideology or your particular scientific understanding. There's a lot of smart people out there. There's a lot of people with motivated self-interest. There's a lot of conflicts of interest. You just got to figure out, which way is the wind blowing, and the wind is blowing towards EVs. We have to figure out how to make money on it, because when you take a look at, say GM in the past, GM was, by extension, the largest employer in America. I mean, they were the largest employer in America, but it didn't just stop there. When you go to the components manufacturers and the dealerships and everything else that was going on with GM, I don't remember the number, but it was a giant number. I think it was way over 30% of all the jobs in America at one point in like the 70s were somehow related to GM. Think about that. And when you threw in Ford and Chrysler, I know the number was around half. So Tesla's not going to have that quite of an impact until you start to think about battery storage, energy storage, and you start talking about solar, right? So what happens when they're putting solar on roofs and a battery and selling you a car? That is a very good business model. And I know that people doubt it because it's not working just yet. But if you look into the future, that's a great business model. And you have to ask yourself a question. People are out there telling you to buy GM and Ford. How are they going to manage that transition? Over the next 10 years, they are going to have to make massive capital investments. Why do you think they're canceling car lines? right? They're discontinuing certain car lines. It has nothing to do with, oh, they're not selling. It's they know we got to wind this down and flip, and that's going to be really expensive for them. So that's why I think Tesla could be in play during the next recession as a buyout candidate. Um, to me, it makes a ton of sense that GM or Ford would buy him. Ford makes more sense to me because I don't think Elon Musk wants anything to do with how heavy the unionization is at GM. But we'll see. Just keep that in the back of your head. So all right, I actually had, like I said, I had notes today. Go ahead and I don't know if Musk would ever sell off, right? I don't know. He likes to do lots of things. I mean, every so often he gets bored and he has to do something new. You know, rocket ships, drilling holes through the earth like a worm, so that we can, you know, do hyperloops. You know, what did he just start? He just started another company, kind of a joke. Oh, he's doing the news thing now. You know, the guy is a serial entrepreneur. He is a serial entrepreneur. He never calls himself a serial entrepreneur, but that's what he is. So the people who are out there calling themselves serial entrepreneurs and they've started 3 or 4 businesses in their career, you know, I've done that. That doesn't make me a serial entrepreneur. I'm not a billionaire. I didn't make all sorts of other people rich, which is what I'm trying to do. You know, I figure if I can make 4, 5, 6, 700,000 people into millionaires, I feel good about that. So we'll get to the solar stocks. Let's see here. Boy, I flew through my notes. I wasn't even looking. All right. So, all right, let's go to solar here since we're kind of on a topic. So China is revamping their solar market again, and they're getting rid of feed-in tariffs like some of our states have been doing. So why are the subsidies being taken away from solar? 2 reasons. One, solar is getting so cheap so fast. I mean, it really is moving quickly that they're like, we don't need to subsidize this because it's already competitive. 2, there are very huge interests aligned against solar because they need to make money in natural gas and coal in particular, and oil. So they put the thumb onto the politicians that they try to buy, usually successfully, and they get the solar tariffs removed. Now, those same people don't say, you know, they're not also saying as a free market thing, let's just get rid of all the subsidies from exploration subsidies, tax subsidies. Let's just get rid of, you know, they're not saying let's level the playing field on energy. They're saying, no, let's take stuff away from solar and this other stuff, you know, it's always been there. Let's just leave it, right? So solar is going to win based on the change in technology. How long is that going to take? Several years yet. Into the 2020s. And I keep saying in the 2020s because I don't know when. I'm accurate here. I'm telling you that's going to be in that range. And when we get our chances in these markets to buy on the down low, we should do it. SunPower is around $7 a share. Again, $7.50, whatever it is. Hey, selling puts on SunPower to scale in. Great idea. First Solar, I want to get in the 40s. I give some First Solar in the 40s. I'll be all over it. If we get a second or third standard deviation decline, right? If SunPower somehow ends up at $4 for a week, I'm loading up the boats on leaps, right? Leaps and stock. Make it a double or triple position. First Solar, same thing. If First Solar goes into the 20s again, man, I'm just shoving money at it because not only do they have a bright future, you know, that's not even trying to be a pun anymore. But you know, First Solar becomes a strategic takeover candidate. SunPower, you know, they still have Total behind them. At some point, Total is going to do something major. They've bought 2 storage companies. They've bought a technology company that will help them get the energy to the power grid and with the storage, and then to you. You know, they're integrating all that. They bought a smart grid company is what they did. And they're getting more into the utilities over in Europe, which they already were in. They bought a utility company. So, you know, keep an eye on what Total is doing because you want to invest alongside Total. They are the bargain hunter's bargain hunter in the energy space. I think that they're for a major, Total is the best managed by far. I don't even think there's a close second. I think Royal Dutch Shell people talk about because of the natural gas purchase, but Royal Dutch Shell is not anywhere close to being managed as well as Total. And here's the other thing: someday, when Iran does open up, Total is going to be the first one in there. They have the absolute best relationship there. Do not discount France. France, they maintain a pretty good relationship with everybody because they don't try to impose so much on other people. And even though they have very similar values to America, they are right. They're the quiet. They're the quiet one. They're the quiet brother. They're not the one that's pounding his chest and stomping his feet and saying, "Hey, do this." Um, and this is part of my transition into the trade issues. Um, France France has a bright future. I know people discount France, and they always have, especially in this country. But France is, they are more a cradle of Republican democracy than almost anybody else. People talk about Greece. Man, it's France. Go take a look at your history in the 17th, 18th century. France is a big deal. We need to stop disrespecting France, and that's just a bad idea. It makes you not see opportunities that are there. So I'll just throw that out there. I've come to very much respect France. So let's talk about trade. Got the G7 meeting going on. I think Trump is leaving later today because he doesn't want to be there for the climate change seminar section. He's going to fly out to Singapore a little bit early for the meeting with Kim Jong-un, which could end up being a Kim Jong giant mistake. We'll see. Maybe it's a great thing. Maybe it works. I don't know. But we have given Kim Jong-un a lot of legitimacy, and I don't know if that works out good or bad. It is clearly a high-risk approach that the president took with Un. Maybe it was right. I don't know. I hope it was right. I hope it was right. I hope it was right. But we'll see. So let's go back to the trade issues. That's also a high-risk brinksmanship approach. And the reason why so many people are shaken by it is because it's not been the typical way that the United States does things. We have not pressed our allies or our enemies for more integration into the world, for a more stable approach, for a freer market, for more cooperation on terrorism, which ultimately, when all is said and done, when the book is written, it's not going to be that there was collusion between the Trump campaign and the Russians on the campaign on winning the election so much. I mean, I think the Russians were doing that anyway. They just wanted to mess with us. But the back channeling that was going on, and I'm a pretty good analyst at this stuff, and I'll just say this right now. I'm almost positive, and I said this right when he took office, everything that Trump is doing on foreign policy in the Middle East has to do with getting rid of the Ayatollah. And I think there's cooperation between the United States and Russia and Saudi Arabia and Israel on that point. I think this is multilateral, very hush-hush. You can see that it's happening, but nobody says it out loud too much. You can see the pressure being exerted on Iran, even by Russia. Why do I say that? Russia increased their oil production by 70,000 barrels a day last week or 2 weeks ago. They just did it. They said, there's oil coming out of the market, price is up there, we're going to make a little bit of money, and we're going to take some Iran and Venezuela's, patrons of theirs. They're filling the void of their patrons, and that's pretty interesting. So, I think that we have to take a look at what's going on a little bit less ideologically and just try to figure these things out. Since the WTO and GATT, the United States has been among the lowest on tariffs, second or third lowest at any given time. There's countries without any tariffs. Hong Kong doesn't have any tariffs, right? So you have to keep in mind there are some completely free trade spots. Singapore is very free trade. Um, so, but what do they produce, right? So you take a look at the rest of the world, and Trump's saying, look, you need to lower your tariffs or we're going to raise ours. So they get all bent out of shape because we're raising tariffs. But the reality is they should be bringing theirs down. We leave ours where ours were if they were coming towards us, but they've stopped doing that. They've gone more protectionist over the years, um, and they don't always do it through tariffs. They do it through other barriers to trade. And the president has a point that the progress on trade really has stalled out in the last, I don't know, since the Great Recession. So, what do you do about that? Do you beg? Do you borrow? Do you cajole? Or do you say, enough is enough? Let's put some pressure on them and say, look, we're the richest and we're the freest traders, among the freest traders. Maybe you should do it our way a little bit more, or at least a little bit more. Come a little bit towards our direction because it might really work out well for you. And there's a point to that. There's a deep economic point to that. When you talk about comparative advantage and how capital goods move, we need to see freer trade. And he's not a big fan of the multilateral deals because a lot of times they get gummed up, right? It's just so much sausage. And he's like, look, let's just have a series of deals. And that actually is a more linear way of doing things versus the blob approach. And maybe it's right. I'm not going to say that everything he's doing sucks just because he's Donald Trump and he's kind of a jerk, right? We need to take a look at these policies by taking a step back and say, okay, is it high risk? Man, I just can't tell you how high risk it is. It's very high risk because the risk is that the other nations, in their arrogance, in their emotional state, they trigger the trade war, right? So you have, I went out Thursday night before I jumped on the airplane, and it was my buddy's birthday, the guy that I'm traveling with for poker in Vegas, and I wore a Jack Daniel's shirt. Why? I don't really drink a lot of whiskey, but I drank Jim Beam and Sour actually that night. I didn't want to drink Jack Daniels, but I had the shirt. Because why? There's a tariff going up on bourbon. Well, as a good American, I thought I would support the bourbon industry, and I drank Jim Beam that night. Drank pretty much of it. I slept very well on the flight out to Arizona. So in any case, when we take a look at the trade issues, they are high risk. We have to acknowledge that, but we should also acknowledge that the rest of the world needs to be more free trader. They have to trade freer. They have to bring down their market barriers because the United States has supported the world economy since World War II. And unless we want to blow a lot of things up so we can do that again for the rest of the world, we need to find a better way. The better way is let's let the markets open up a little bit more. If shoes are better from over there, then let's buy the shoes over there, but then we'll make this and they'll make that. And that's how comparative advantage works. And we really need to do that. So, all right. I am a pretty liberal guy, so it is hard for me to give Trump credit just because I think that there are other things going on with him that are horrible. But, on the trade, you just have to acknowledge it's high risk, but the end goal is probably right. And let's see if we get there. And if we don't, as investors, we have to be prepared for it. And we have to know when to get the heck out of Dodge. And we need to know when when do we, are we going to have a March 2009 moment where you should just be backing up the truck and buying everything because it just gets so damn cheap? I don't know. In the asset allocation models, I've pretty much told you, find ways to get the 25% cash. And then if you're writing puts against some of that cash, that expires. But, you need to be flirting with that 25% cash on a regular basis so that if something goes south on us, we have the ammunition in that cash to buy when things get super cheap. And remember, we have a secret. The secret is if we really do get a giant bear market, we're not just going to buy stocks at the bottom. We're going to buy calls. We're going to buy long-term calls. And we'll go long-dated calls once the stimulus, whatever stimulus would come on the next bear market and recession, when they start announcing that stimulus, we start becoming shoppers. We try to find the sweet spots. We go to the core four and say, okay, this is what the central banks and the governments are going to support. Let's buy those, right? The people who bought mortgage REITs when nobody wanted mortgage REITs, they made what, 4, 5, 600% on their money because the government supported it. You had the central bank buying all those debts. All right. Wow, I just breezed through all my notes. So taking notes and having a structure, we did this column 15 minutes shorter than normal. All right, so there it is. Take notes. Again, this summer, Dale Pinkert and we'll get to Q&A in a second. So put your questions up, and I'll fly through those. Dale Pinkert for currencies sometime in July. Turkium, I think, is next Friday, but they might be the Friday after that. I have to contact him when I get to Vegas. Then we're going to have a presentation on commodities because I think that we have a really good buy low opportunity coming up in corn and soybeans, and that is a pretty interesting trade. And we just have to figure out, is it going to be right for us? Is there a way for us to take part in that? And I'll talk to Dale about that too, because soybeans might get cheap and stay cheap for a while. So we don't want to buy at the beginning of cheap. We want to buy at the end of cheap, because at the end of cheap, the next thing that comes is expensive. So we don't want to buy too early because, then you have dead money for a long period of time, and dead money sucks. I don't like putting up zeros. All right, so let's go to questions. I don't read French, but, so something, the French are formidable. I think that's what that means. As of November 2017, China had 120 gigawatts of coal under construction, over 20 gigawatts of nuclear, hydropower, wind being built. China has so much electricity generation, real and local interests are fighting each other. Will China start using more solar again soon? Yeah, because everything's going. You gotta remember, in China, they've outlawed gasoline cars already. They're going to stop selling them in 2025 or 2030. It's one or the other. I can't remember. They're going to need a lot more electricity. So eventually solar is going to be ubiquitous. It's going to be everywhere, right? Solar's coming. It's going to come in a massive way. It'll end up being at least half of the energy that we use, because incrementally we're going to see this huge increase in energy demand starting sometime in the next decade because of the EVs. All right. Well, they're good people, basically. All right. Yeah, they're good people. That's about it. We don't have a lot of questions today. What is it, Saturday morning or something? All right. Well, take a look at the June stocks and options. On these stocks, I basically put in everything that I'm looking at, right? So the June stocks page is what I own. It's what I like to own. It's what I'm nibbling on. It's what I've owned recently. Take a look at a company like Procter & Gamble. I've traded it a little bit, which is weird to trade Procter & Gamble because most people just buy it and hold it for the dividend. But I'm going to tell you something. Dividend investing is super important. Can't say it's not. It's super important, but it's not the most important thing. So all these folks who talk about dividend drip investing and dividend growth investing, one, their definitions are bad. Two, their analysis is usually bad. 4 out of 5. 4 out of 5 analysts suck, right? 4 out of 5 investing ideas suck. But when you take a look at dividend investing, the cash that goes into your account, right, that's the dry powder that's accumulating. And right now, we know we're towards the end of the economic cycle. I think we got about 2 years to go, maybe a year and a half, through next summer. And I still think we're going to be set up for a negative surprise early next year. But, you want to play these spots while you can, and ultimately have cash available at some point. Buffett generates cash all the time. He sells puts, right? We're big put sellers. He collects his dividends. He plays the float on his insurance companies, which we can't do. So we have to find ways of kind of creating a float-like environment where we always have cash coming in, and that's good for us. Best oil companies to buy now, I've said it 18 zillion times, Encana. Okay, if you want growth, you buy Encana. You can take a look at Pioneer. If you want unhedged companies, I haven't looked at their prices lately, but Continental and Whiting aren't very hedged, so increase in oil prices helps them a lot. USOU. Now here's the thing: when you put in a limit order on USOU, you have to in your head translate that into what is the price of WTI. So I actually am not using a lot of limit orders on USOU that I leave. I don't make them good till cancels. I have them set up for that day as it gets close. So last week, I had it set up at 52 or something. I don't remember. I missed. It didn't hit, and then it jumped. But we want to buy USOU when the price of WTI, when crude is around low 60s. I have 5% in USOU at 60. Should I hold it? Yes. Should you buy more? I just told you about how. There is not. No, I did not. I did not say something about the DK with this type of ETF. I talked about backwardation and contango, and right now the oil market is in backwardation, which means that there is incentive to take oil out of inventory and sell it because you get a good spot price. You're not going to hold it in inventory. So when inventories go down, that drives the price of oil up in the future at some point. So, we have a good situation with the oil futures. Do I see the WTI and Brent spread closing the gap? Yes, next year. The WTI and Brent spread is going to close simultaneously when the Permian, the WTI gap closes, and when Canada finally gets the pipeline they just bought from Kinder Morgan open next year probably. So you have a lot of oil prices that will converge Q3 next year, maybe, give or take, because all those Permian pipelines start to come on at that point. You've got high oil demand, presuming Trans-Canada is finished about a year out, because it's mostly done. I mean they can fire that out in several months. They just got to get financing and finally jam it to the British Columbia's government for blockading it. Canada. To our Canadian friends up there, I like Canadians. I'm going to go party with some Canadians in Las Vegas next week. I understand the environmental concerns. I am a tree hugger at heart, but you need to find a way to get that pipeline to the coast because you need to sell that oil that you have up there, or you are, a little pig Latin here. You're uckfade if you don't get that oil to market. So you need to get those spreads. The Canadian spread is way higher than the Permian, way higher than the WTI to Brent. I mean, Canadian crude oil was it $35 below Brent at one point? I mean, it's just way low. So that pipeline needs to get to the coast so they can start shipping some oil to Asia. Yeah, Trans-Canada. I haven't really put a ton of research. What's the Canadian oil company that Buffett owns? Is it Sun something? That's probably the one to look at. I have to take a look at those companies again. I'm just not super familiar with the Canadian companies right now. That hasn't been my focus. But that's probably something we should get on the agenda here soon. Again, we don't need to be too early because those spreads probably don't close until next year, and we don't want to invest in the Canadian companies until a quarter or two ahead of their cash flows changing, like we did second half of last year and early this year. We knew that the cash flows were going to change at the Permian-based companies. So the same thing with the Canadian oil sands companies is we want to invest in them a quarter or two ahead of when we expect cash flows to change. You don't want to invest 2, 3, 4 years out. Yeah, Suncor. Smart everything. You own SunPower, Sierra Wireless, CenturyLink, AT&T, a little Calix. T2 Biosystems, kind of smart. Not exactly what we're talking about, but hey, good biotech. What is that? Is that up? The stock's up 50% in the 2 months since I recommended it. But those calls, and you bought calls, man. Edge computing, yeah, all kinds of stuff. The semiconductors benefit from that, right? That's Micron, Intel, Western Digital's got some action in there. I saw something happen with their stock yesterday. It went down a bit. So your take on refiners right now? Basic logic in refining is that as the price of oil goes up, their margins go down, right? That's why I took Phillips 66 off the list in February. That's why I've been telling people if you own Andeaver, sell covered calls, take some profits. The refiners run is going to be done first. And, the whole petrochemical narrative, it's wrong, right? It'll be strong for a while. And as long as you get momentum investors chasing, then fine. But you need to use those momentum investors as a way to finding your, just like we scale into positions over months and months, scale out of these positions, taking your profits as it goes up. Make sense? All right. I think we are done in 52 minutes. That might be a world record. I am off to play in the pool, I think, with my nephew. And, maybe we'll go somewhere air conditioned. I don't know if there's a Discovery World or something in the Phoenix area. I'm sure my brother knows and my sister-in-law, they know. But we're going to do something fun today. Monday morning, driving out to Lake Havasu. So if you happen to be in Havasu, hey, give me a call or send me a message. And, I'll be driving around. I might end up in Laughlin for a night. I think we're going to end up just adding a day to the Flamingo. So we'll see how it goes. Going to play a lot of cash games and a handful of tournaments. I'm pretty fired up about the tournaments again. I like the cash games better, but yesterday something clicked for me in the tournament, and I only made one mistake. And you'll like this. So there's a guy sitting two seats to my left, and it seemed like 3 seats because I was on the end of the table and he was next to the dealer. And he was seat 1, I was seat 8. And Vikings fan. Viking shirt, Viking cap. I think his cheeks were a little purple. Irritated the crap out of me. I'm a Packer fan. So he played back at me a couple times. I think he bluffed me off a hand. I got irritated. So I ended up re-raising him on a hand that I should have called and then made a continuation bet. And I ended up losing a third of my chip stack, and I had to make it back, which I did. But, I tell you what, don't make emotional mistakes with your investing. That's the moral of the story. Just because somebody's a Vikings fan doesn't mean they're a bad person. It might, but I'm not really sure. But you still, don't overbet your hand. And that's what I did. And so we have to remember, don't overbet your hand. All right, everybody, have a great weekend. And I'll talk to you on Friday, and I'll be on the board weird hours, but I'll be around. Take care.